Nifty on Friday formed a dark cloud cover pattern on the daily price charts, which is a bearish trend reversal pattern. But the sell-off, I mean, that was partly due to weak global cues, right? This morning, the cues are much better, and so has been the opening, right? So, considering that this recovery in the morning, Avani, would you say that the bullish momentum is still intact? If so, what are the key hurdles that you are tracking on the upside, ma'am?
Good morning, Suyash, and a very good morning to all the viewers. So Nifty did form a dark cloud cover on Friday, and today also, if you look at the after the opening price, the market has not been able to sustain much. So technically, I think 22,300 is a major support level until and unless 22,300 level is holding on. I think the momentum is still intact. I would say the trend is still intact. The momentum is missing right now. But on the upside, the momentum will pick up only once it crosses 22,600 level. And beyond that, then we have multiple resistances. So if you look at the options data also, I think there are multiple resistances and there are multiple supports. So this clearly indicates, sorry, this clearly indicates that more or less, the volatility will be there for both Nifty and Bank Nifty, but they'll more or less stay in a particular range. The range for Nifty is 22,300 on the downside, and on the upside, once it crosses 22,600, then the range extends up to 22,800. Otherwise, currently it is 22,300 to 22,600. And for Bank Nifty, 48,000 is a crucial, very crucial support level. Bank Nifty is stronger than Nifty, and on the upside, 48,600 is a hurdle area beyond which, if it manages to close, then we will see an attempt to retest the 49,000 level. So broader range for Bank Nifty is 48,000 to 49,000. Markets are going to remain volatile within this range.
All right, that's a view coming in on Nifty and Bank Nifty. And speaking about Bank Nifty, I mean, it's leading this recovery this morning. It's up 0.5%, but the levels that you put out, 48,600, is where we got to in today's session. We have slipped by about 150 points since then, but it's one stock that's driving this rally, and that's ICICI Bank. And ICICI Bank on Saturday reported its Q4 numbers. Now, net interest income, which is the difference between interest earned and interest paid, was ahead of expectations, and so was PAT. But digging a bit deeper, there are a few concerns. Loan growth year on year was the weakest in 11 quarters. Net interest income growth was the weakest in 21 quarters, also on a year on year basis. And net interest margin slipped by about 50 basis points from the previous year and was essentially flat on a sequential basis. But looking at the stock this morning, Avani, up 2%, near record high levels. And it's one of the top contributor on Nifty. What's your call on ICICI Bank?
See, ICICI Bank on Friday, it formed an inside bar pattern, which means that it did not cross the Thursday's high of 1126. Neither did it break the low of Thursday's low, and that is the reason why now from current levels, once it crosses 1126, which we have seen today, ICICI Bank crossing that level. So if it sustains above 1126, I think the next hurdle area is 1150. The trend is positive, extremely positive for the stock, and any kind of dip if we see in the stock, I think it's a good stock to accumulate, to add to the portfolio.
Good morning, Avani. Another big major that announced their results last week was HCL Tech. Now, the IT services sector is expected to report muted growth for the quarter gone by, primarily on account of weaker discretionary spend due to challenging global geopolitical issues that are happening. Revenue grew by around over 5%. Net profit was muted, just growing about 0.35% year on year. EBITDA, of course, grew by 1.41%. It was expected to go down as per the analysts. The stock by far has been, along with Persistence, the best performer over the last 1 year. What do you make of HCL Tech and the IT space in the quarter gone by?
As far as HCL Tech is concerned, I think the crucial support area was around 1410 to 1430. And if at all today, if we see some kind of recovery and the stock manages to close above 1410 to 1430, then it will stabilize. But if at all the close is below 1410, then we'll be seeing the stock moving downwards to around 1350. Now, why I'm saying this is because the highest open interest for the May series is somewhere around 1400 to 1410, and that should have been the support level. But if we see the stock sustaining below 1400 levels, then there will be a lot of unwinding by the put writers, and then the stock may head downwards further to around 1350. So as of now, I think any kind of pullback or rally, if we see up to somewhere around 1430, the selling pressure will emerge again. Profit booking will, not profit booking, but yes, unwinding will happen around those levels. And currently the stock looks weak for a level of 1350 on the downside.
Avni, the stock is down almost 6% this morning. Buy on dips time right now?
No, Amit, that's what I just mentioned, that the crucial support level of 1410 has been breached. In case if it sustains below 1410, and even if it closes also below 1410 today, then the stock is heading towards 1350. So supports have been breached. So no point in catching a falling knife. We still have a lot of downside in the stock.
Still a lot of downside, no point catching a falling knife. But Avni, what are your picks for our investors this morning?
So Amit, my first stock will be ITC. ITC has slowly, gradually, without coming under anyone's radar, the stock has moved up quite well. And I think now it has post the block deal that had happened. It had already bottomed out at 400, but it was consolidating in the range of 1420 to 1437, 1440 levels. And now it is in a very good shape to move up. And I think for the May series, it should move up close to its previous all-time highs of around 470. So between 437 to 440, it's a good buy for a target of 465 and 470 on the upside for the May series. And stop loss can be maintained at 425. The second pick would be Bajaj Auto. We're going to see the auto numbers coming up this week, and expectation on the numbers are good for Bajaj Auto. It's a buy between 8900 to 8920 area. Within these 20 points range, one can accumulate the stock. The stop loss can be kept at 8640, and the upside is up to 9350 to 9600. So this is going to be another stock that will move like how Maruti has moved right from 11,500 to 13,000 plus levels. So Bajaj Auto can definitely be kept on radar.